Good morning. It's Richard Calhoun, Creekside Realty, 40 years of servicing consumers here in Silicon Valley. We're here to talk about the real estate market conditions. We're going to start right in with overbidding. This is the magnitude of overbidding in the different micro market areas. This is single family homes only. The redder the color, the more buyers are overbidding. The bluer the color, the less they're overbidding. So the only blue color is right here in the Atherton Menlo Park area, where sellers are only getting 97.7% of their asking price. Real quickly, it looks like one of the hottest spots is here in Cupertino, Sunnyvale, where sellers are getting 105.4% of their asking price. Moving on to the frequency of overbidding, this is how often overbidding happens. The color intensities are darker because right now we're seeing a lot of overbidding, but buyers are a little hesitant to overbid a lot just because we've had a recent insult to the marketplace. So here you can see Milpitas is looks like the hottest at 76.1%. That means more than 3/4 of the sellers are getting more than their asking price. This is the days of unsold inventory. This is the supply-demand balance. This is where the market is going. The redder the area, the more aggressive the marketplace is. And some of these numbers are just unbelievable. In Milpitas, North Valley, Berrios, and Santa Teresa, we would sell every home that's currently on the market in just 11 days. Then you jump all the way up to Cupertino and Sunnyvale at 20 days. Foster City is a real small market area. It fluctuates a lot. It's at 10 days. And again, the slowest area is Menlo Park, Atherton, and it's sitting at 97 days of unsold inventory. Here is the unsold inventory in each one of the 22 different micro market areas. The previous slide only showed single family homes. This is single family homes and condos and townhouses as well, as you can see from the index. This is the Menlo Park, Atherton area going up. A lot of these right in here are condos and townhouses because the next highest area was Saratoga, Los Gatos at somewhere around 55, and I think it's there. So you can see the condos townhouse market is slower because 4 out of about 6 groups are all some of the slowest market areas. Here is days on sold inventory for just the past week, but this is looking at what I call macro data. Macro data is Santa Clara, San Mateo County, single family condos and townhouses. The blue line is the current data. You can see the big insult to the marketplace with shelter in place. Starting in week 23, we were basically following the normal market trend, but below it. The gold line is the 5-year median, being 2015 through 2019, which were 5 good years. So what we're doing is we're comparing the current year to the last 5 good years, and we're outperforming that, which is pretty phenomenal when you think about it. Here, we're looking at the 3 key indicators compared to normal. So if the market was 100% normal, all 3 lines would be flat, horizontal, right here on the 100% curve. And what you have is you have available inventory. So right now, available inventory is about 125% of what you'd expect it to be at this time of the year. So we actually have more inventory than we normally do. But then you look at the number of new offers. The number of new offers is coming in at something like 145% of what we would expect it to be. And that's quite a bit more than the listings, which is why the days of unsold inventory is so high. And then the last graph up here is the number of new listings, and the number of new listings is coming in is way above normal. So you can see everything's been above normal again since about week 23. There's been some fluctuations here. Those fluctuations are basically the calendar shift from the 5-year median to the current year. The current year, Labor Day was as late as it possibly could be in the year, so it fell 1 week later, and that's what caused all those perturbations. This is looking at just the active off listings that are currently on the marketplace compared to normal. And you can see basically we've had exactly normal inventory. Right now, we've been having a little bit more inventory than normal. Sellers are not getting ready for the end of the holidays, so they're coming on the marketplace. But so far, the buyers have been taking up everything that's coming on the marketplace. This is the number of new listings, basically the same story. Fairly normal year, a little more fluctuation because here you're looking at just a 1-week trend instead of what's on the marketplace. And then you can see the last, maybe since week 37, 38, we've been getting more new inventory coming on the marketplace than you would normally expect. This is the number of new offers accepted. Again, it was hit by shelter in place. Then we had a few weeks of normal, basically something like week 25 through 35. And then ever since and maybe even be earlier than that, maybe about week 28, 9, it's been outperforming what you would expect it to do based on the 5-year median. So we're selling a lot more inventory. We're making up for what we lost. Here's the frequency just in the time. Again, this is macro data. So you can see the shelter in place had a huge hit. We're not back up here where 70% of the sellers were getting more than their asking price, but we're still sitting here at something like 60% of the sellers are getting more than their asking price. Here's the breakdown for each one of the micro market areas. Santa Clara County single family homes, because that's the single biggest one. I've made it red and a little bolder so it can stand out a little bit in the mass. And that's basically what the trend is for the micro market areas. Now, if you look at Santa Clara County, you can see that it's basically at somewhere very close to 70%. So it's outperforming the entire macro area, which means the rest of the areas, townhouses and condos in San Mateo County aren't doing as well as single family homes in Santa Clara County. This is the magnitude of overbidding. You can see we're somewhere right around 103%. There's been some fluctuation, but we've been basically at 103% since about week 40. We're now week 48. So that's 2 months of sellers getting 3% more than their asking price. Not the 5% we were at the time of shelter in place. But again, anytime the market has an insult, buyers tend to be constrained on how much they're willing to overbid. Here's the magnitude of each one of the different areas. And again, you can see in Santa Clara County, it's in single family homes, the red line is outperforming because this is 103, this is 105. So that's somewhere around 103.6, 103.7. So it's outperforming the overall macro areas. This graph is the sale price to list price ratio for the last 12 weeks. The current week is red. There's a couple things that are noteworthy here, in my opinion. Right through here, just when a buyer's just overbidding 100%, they're a little stingy. But now at the top end here, you can start seeing it coming up. So this is indicating that people are willing now, and more willing than they had been in the last several weeks, to start really jumping up how much they're willing to overbid. If I was to guess, this is something like 7% of the buyers are paying more than 15% above the seller's asking price. That starts to be pretty significant. Also on the low end, you can see it's doing a little bit better when people are going in below asking price. So they're not dropping it down as much. So it's conservative right around 100%. But now, and this is the first week this has happened, where at the high end, it's starting to jump out. To me, we have not been here before, but what that indicates to me is come the first of the year, buyers are going to be willing to overbid, and we're going to see some significant appreciation. This is the same thing, just going back for more weeks. I've also added in the best month ever, which was April of 2018. This is the best November ever. And you might say, why am I doing November? We're in December, Richard. I'm using November because November data starts on November 1st and goes all the way up through midnight tonight. So, I thought that was the more appropriate since we're going back in time. Next week, this will be December data. Here is looking at the current week data. So now we're looking at only 1 week's data, and we're comparing that to the macro data for the last several years. So you can see 2020 is not doing very well, basically in the middle of the marketplace, from basically right here all the way down to about here. Then once you get below 100%, it's the second best year we've had. And once you start getting way up here, it starts outperforming. It's just here, there's 1, 2, 3, 4 years. So we're the fifth best year here. Up here, we're probably the third best year. Down here, we're the second best year. So buyers are not willing to, they're willing to pay asking price. When they go below asking price, they're timid. When they go above asking price, they're timid. At the top end, they're getting a little less timid. Here's the same graph, just going back for more years. And again, you can see that the recent years are outperforming because the older years are dots, and the next older years are dashed, and then the more current years are the solid lines. And you can see that here, 2017 was the best year we had at this time of the year. This may seem like I'm being redundant, but what I'm doing now is I'm looking at only single family homes in Santa Clara County. And the reason I'm doing this is because they're what's really outperforming. And you can see that instead of being, the third best year, the fourth best year, something like that, now look at this. It's clearly the second best year, and it's the second best year by quite a bit. And when you even add in the other years in the past, going all the way back to 1997, it's the second best year. And, it's getting pretty close right here to be tied, but, up here it would take it away. And also down here it takes it away. So I'm willing to give 2020 the second best year for overbidding that we've ever had. And that's pretty amazing when you've just gone through an insult where I say that the buyers are stingy on their overbidding. I think this might be not a new graph, but the first time I've done this. I'm now quoting this. This is sold price. It's in millions. And what you have is the 10 percentile price, the median price, and the 90 percentile price. So very quickly, the coding is based on the median price. Then what you can say is for South County, for example, 80% of the homes are between $750,000 and $1.5 million. So you got a range now for each one of these areas, and you can quickly determine what geographical area you can most likely find a house for your given price range. Palo Alto, for example, basically $2.5 million up to $5.6 million, with the median being 3.4. Here is the actual data for today, so you can come back and look at any particular data that you want. The first one was Santa Clara County single-family homes. This is San Mateo County single-family homes. And this third one is condos in both counties. Here is a little surprise. It's a little preview. I put out the data for November. This is preliminary because remember, transactions up through midnight tonight all count. With that, I will pause and see if anyone has any questions before we go into the different micro market areas. Not seeing any mics getting unmuted, I will move forward. So now we're going to be looking at 11 metrics. Each metric has 5 graphs. We're only going to look at one graph for the most part for each metric. The first one is days on unsold inventory. I lead off with this because to me, it's the most significant market indicator. You're looking at red being Santa Clara County single-family homes. The gray line, I'll call it, is San Mateo County single-family homes, and the gold line is Santa Clara County condo townhouses. So the big takeaway is the condo townhouses were doing the best because the lower the days of unsold inventory, the faster the marketplace. And now it's doing the worst. The single family homes are doing roughly the same. I will also point out it is unusual for Santa Clara County to be outperforming San Mateo County. It was doing it before shelter in place. It's been doing it subsequent to shelter in place. I think it's doing it more significantly in more aspects now after shelter in place, in part because people are willing to be further away from their workplace in order to get a larger house. Now we look at the frequency of overbidding. The same thing, the higher the frequency, the stronger the marketplace. Just prior to shelter in place, you can see single family homes in Santa Clara County and San Mateo County were roughly doing the same. Now San Mateo County is underperforming Santa Clara County. Condos and townhouses were underperforming, and they're still underperforming. That makes sense to me because basically what I have observed is the single family home prices fluctuate more than the condo townhouse. Condo townhouses are more like the turtle that just slugs along and eventually gets to the finish line, where single family homes tend to go for the sprint and then pause, sprint and pause. And the sprint typically tends to be in the spring. And by spring, that's basically middle of January through about the middle of April, end of April. Now we're looking at the magnitude of overbidding, roughly the same concept. You can see San Mateo County now, the magnitude of overbidding is coming down. That would indicate to me buyers in that area in the single family homes in San Mateo County are saying, we don't have to overbid. We don't have to overbid by as much, so we can get a little more conservative on how much we overbid. Santa Clara County, meanwhile, is continuing to get more and more aggressive. It's a slow climb, but it's a pretty steady climb. I mean, you only have to go back to the middle of October here to be at 103%. And now at the beginning of December, you're probably approaching 103.75%. So you went up 0.75%. Is that big of a deal? It's not huge, but going up 0.75% when you're talking about 3%, that becomes a fairly large percentage increase. Now we're looking at median days on market. You can see Santa Clara County got down to 8 days. We're at 9. Now we're at 10. San Mateo County is up at, I would guess, 11. It was at 12, so it's actually improved a little bit. Condos and townhouses have been basically around 15. This was 14 up to 15, down to 13, 14, and now back up to 15. That's just what the median for the different median days on the market, just a quick snapshot. I find consumers understand median days on the market more than they understand days on unsold inventory. They're related, but days of unsold inventory is a better indicator because it's the rate of the speed of the marketplace, where median days on the marketplace takes time to adjust upwards and downwards. So there's a hysteresis in the data. Currently available inventory, you can see all the areas are plummeting down. They normally do plummet it down at this time of the year because remember I said in Santa Clara County now we actually are having more new listings coming on the marketplace and more inventory than we normally do. So this line would have broken earlier and steeper. Basically, holidays are not having as much impact on the real estate market, and it was the holidays that caused it to drop down. And offers are going down. I suspect we can actually say offers are dropping down because there is a limited supply of inventory. I mean, when a major micro market area such as Milpitas, North Valley, Santa Teresa, and Blossom Valley only have 10 days of unsold inventory, and most agents put a property on the market on, say, a Thursday, maybe even Wednesday now with shelter in place, and then turn around and won't look at offers till Wednesday or Thursday. The bulk of that 10 days is just marketing time. So if we looked at that, maybe there'd be 1 or 2 days of unsold inventory. But anyway, it's pretty amazing what's happening. This is the number of offers in the last 5 weeks. Again, the trend is down. I think it's partly because of the time of the year. I think it's partly there's no inventory. I think the buyers would continue to buy what's out there. Here is the number of closed transactions. It lags behind by about 30 days for the length of the median escrow. So it hasn't started really coming down. There might be some indications of a downward trend just starting now. I think it's too early to call it. I would call it basically flat. Here's the sold prices in the different micro market areas. In general, I'll call this flat. I think I had a conversation with someone and they were saying this is up 5%. 5% is fairly flat. I'm basically not looking at the numbers, but I'm going from here to somewhere back around here, and it's pretty flat. If you start going back anywhere before shelter in place, and remember there's a lag time. So basically, if you go past April 5th of this year, yes, there was some appreciation, but if I look at the red line here, I might call that 800,000, and I might come out here and I might call it 850. That's fairly flat, but $50,000 on an $800,000 price is about a 5% price appreciation. Here's the data just cleaned up a little bit so you can see it. You can see the little fluctuations for every single day because this is data that I actually calculate data daily. Here is the median price, which is what most people follow. Again, you can see there's basically flat. And maybe the reason I'm emphasizing it's flat is I think almost everybody, when shelter in place happened, expected the real estate market to be negatively impacted, and it just hasn't happened. You could say there's a negative impact right here, but look how short-lived it is. And I think some of that was just people uncertainty. Basically, when we could open up and sell houses right around May 1st, people were uncertain. So just before that, people were able to get deals, if you'll say, price homes where sellers were willing to sell below asking price because they weren't sure. Just cleaned up median sold price. I do that for the sold price median just because it's such a significant factor. Here is the 90 percentile price to see what's happening. You can see how the most expensive area, the San Mateo County, Atherton, Menlo Park, fluctuates a lot more. That's because there's not very many homes in that micro market area, and the prices vary widely. So when you have a lot of fluctuations like that, it's really hard to tell what's happening with price trends or property values on a given property. Here's the 90 percentile for each one. And again, you can see from here, which was the low point of shelter in place, there was basically some appreciation. But if you go from where we were right here, if you take that, then we're basically at the same level. If you go back to the beginning part of the year where we were only at 2.5 million, there's definitely been some appreciation, but there's definitely no downward trend. And if anyone wanted to say there's an upward trend, I would not disagree. Even condos and townhouses, see how it gradually came up and then it was basically flat, and then there was a little dip with the uncertainty, and now we're back over the uncertainty maybe for the last couple of weeks, and we're basically back to the same level at the time shelter in place was announced. This is the duration of escrow. Nothing too significant here other than we're taking longer. We were down to 25 days in San Mateo County, 27 days in Santa Clara. Condos and townhouses were 28. Now they're all basically solidly at 30 days. Here's days of unsold inventory. We've already talked about this, but now what I'm doing is going back in time. These maps will fluctuate and scale a little bit. I've changed my screen resolution, so I think I've locked it in now going forward. But here you can see the 14th, the 21st, the 28th, and now the 5th. And this is the format that I'm going to do going forward. You get the days over here nicely. You can see South County. Yes, I'm cutting off a little bit of South County, but you know it's South County. And you can see up here in North County, I'm just cutting off the top. But this way, I think that I will be able to move from week to week without doing it. So again, that finishes up the weekly stuff. If I don't have any questions, which I'll check, I will go in and do a quick recap of monthly stuff that is only preliminary. Not seeing anyone unmuting, I will go in and we will go in and we'll look at the new monthly stuff. Now, again, I'm going to caution you, this is preliminary data. It's going to be changed by tonight's data. I'm just going to highlight some things, go over it pretty quickly. 673 single family homes on the marketplace. You can see for single family homes in Santa Clara County, that is actually one of the lowest numbers for this time of the year. So now you go back and say, how can I say there was more inventory? Remember, that was macro data. So what that indicates is San Mateo County condos and townhouses are not, there's more inventory there. Single family homes, the only year that was less was 2017, and that was the absolute year that stood out. So we have the second lowest inventory of any year that I'm spotting, and I think that's accurate. Median and average days on the market at 10. Again, 2017 compared. But other than that, there's, the closest comparison is like 19 days, 14 days and 50 days. 16 days. So again, we're having this in Santa Clara County single family homes. And this is where it's important, remember, to pay attention to what you're talking about. Because if you're talking about macro data, which I did only to try to understand what was happening to the overall real estate marketplace, it's indicating a whole lot slower of a marketplace than single family homes in Santa Clara County, which is the biggest single micro market area. So this is what the bulk of the buyers out there are experiencing, is not what the data earlier was talking about when you were doing global. So we're now having the second best year. If you look at the list price of what's on the market, you're real high at 1.8. What's selling is up from last year, but is nowhere near that 1.8. In fact, I would wager, without even having looked at it, this difference is 500,000. There's not, even on a percentage basis, you're not going to find any difference, because here you're not that much difference, and the difference is only 200,000. Here the difference is only 100,000. Here the difference is going to be 400,000. That's actually getting pretty close. It's about 350,000 if I do my math a little bit more accurate. So the difference here, and there is at least one person out in the world that believes this means that the sellers are taking a $500,000 haircut between their asking price and their sale price. That is not what it means. It means that the homes that are on the market are more expensive homes, and they're staying on the market longer. It's the more expensive areas. It's the Menlo Park, it's the Atherton, where they're no longer in high demand because commutes are no longer a premium, and they're sitting on the market, and they're making up a bigger market share. Now, obviously, that isn't an accurate example, because Menlo Park and Atherton aren't in Santa Clara County, so I have to do the same thing in Santa Clara County and saying things like Palo Alto, Los Altos are staying on the market longer than Berryessa and Milpitas. And that's true. And maybe what it really boils down to is your affordable areas, Milpitas, North Valley, Santa Teresa, Blossom Valley. It's the fastest I've seen a micro market area at 10 days. So what it's basically saying is there's no low-end homes on the marketplace. If there's no low-end homes on the marketplace, that causes the median price to go up. Number of sales, 28.3. Look back. Even 2017, our record year, we're outperforming that. You have to, and this is a little hard to understand, but as you come back in time, we used to sell more homes. So, in 2011, we were selling 34 homes and 38 homes and 38 homes and 31 homes. So the norm back here, as we go back in history, the best year we ever had as volume of sales appears to be 2003 at 41. But we're not selling that kind of volume anymore, in part because of Prop 13. Whether Prop 19 will increase that or not, who knows? It probably will. How noticeably, I don't know. Number of sales. This is going to be a pretty high record, but it's going to go down to 99, and then you have to go way back in time to get to higher numbers. Looking at square footage, it's not really out of line. I might say it's up a little bit, but if you go back to 2017, it was at 1762. So square footage of homes is going up. People want more houses. And this is even before shelter in place happened. And then you finally come down to closing. So you get sale price. You're at 103.7%. You were at 108% in 2017. So even though we're in a marketplace that is getting close to being equivalent, depending on how you do it, basically I would look at days of unsold inventory. That's the speed of the marketplace. And you're at 23.7 versus 21.5. So you're same realm, but the magnitude of overbidding is dramatically lower. The frequency of overbidding is lower, but not as much. I mean, you're at 78% versus 67. And then finally you come down to prices. We're now at record high prices, obviously. And this is your 10 percentile at 890,000. Your median is just under 1.4. That was up to 1.450, I think. I think that it might have been 1.435. And your top percentage is at 2.9%. This is just the semi-logarithmic scale. So the slope of these lines is the rate of appreciation. This is what you're more likely to have seen in the past, where you actually plot it linearly. And you can see here's your peak price on a monthly basis, whatever the number was. This is your sale price to list price ratio, magnitude of overbidding. You can see you're just below 105%. And this is single family homes. Here it looks like it's probably about 104 and a quarter, maybe something like that. And then the frequency of overbidding, it looks like it's about 68%. I think that's 68%. It's hard for me to follow straight across. The blue line is days of unsold inventory, the most important indicator. You can see you're coming down and you're still following down. The gold line is the average days on the market, which is what most people quote, which is the least meaningful out of this. Median days on the market is far more important. That's where half the sellers are selling. The reason you dipped down to basically zero here was the MLS froze days on marketplace during shelter in place. This is just some moving averages. I need to look at the days unsold inventory on this graph because it does not make sense to me. This is telling me my days of unsold inventory is at 40. And if that was a 12-month average, that would make sense potentially because we were slower. But the 1X up here is telling me it's in real time. And it's not. I just haven't had time to go back and look at that. But what I believe the other data points is the average days on markets or averages of the 12-month moving average. So you can see inventory peaked back here before shelter in place late in 2019, maybe like August of 2018. And the inventory has been dropping ever since. Now, all of a sudden, you might say, hey, it's leveled off the last month. And that may be, in fact, true. Then you look at the offers accepted, the gold line. You can see that we dropped down right when shelter in place was happening, and now we're climbing. So the number of offers climbing, and then, of course, the number of closings is climbing, delayed by the 30-day escrow. Here is overbidding, and this is now single family homes, Santa Clara County only for my monthly data. So this is why we're now in the second best month ever. You can see when you get up here, there's a little bit of resistance. So even though when I was looking at the data earlier, this is the high end is where it was really popping up compared to single family homes in Santa Clara County, it actually isn't popping up. So, it's sort of an apples and oranges and what matters. But again, second best year and second best year by quite a bit, so I think that's what it's saying is single family homes in Santa Clara County are in huge demand. Here is just the last 12 years, so you can see it a little bit better. So here's the second best year. And out of the last 12 years, I mean, there starts to be quite a bit of separation. The dotted line here, if I was guessing, would be maybe 2000. And I would be more likely to guess 2012. It's hard to tell with the color codes. And I'm going to have to play with that to try to make it easier to tell. And then this is just plotting the 10 percentile price towards the median. So when they got together, closer together here, that was price compression. The low end of the marketplace melted down in February of 2007 with the mortgage meltdown. The high end didn't melt down until August of 2008. And then finally, you're getting a little bit of price compression coming back. Basically, if you went back in time a little bit further, this line would have been a little lower is my expectation. And the reason it came up here was the liar loans. That was where you could basically say how much money you had and you could get in a house with 100% financing. So people on minimum wage were buying $1 million homes. Clearly, they couldn't make the payments. Eventually, the foreclosure started to happen, the mortgage meltdown happened. The low end of the marketplace got hit the highest. It was overinflated, and that's why it's underperforming in the long term. And with that, I'm done. So that's how to reach me. I'm open to questions on any of the slides, and if I have none, I will call it an end of the day. Any questions?